Thank you very much. Some very interesting points raised in those remarks. We'll start with a 6-minute round, starting with Mr. Poilievre. Pierre, the floor is yours.
Interesting points. It's bloody terrifying, Mr. Chair. In fact, Mr. Siddell, the reason you were cut off is because of the overload of terrifying data you were pouring into your microphone. It shut the system down. If I heard you right, you're saying that within a year, household debt to GDP could reach 200%. Did I hear that right?
You did. In fact, we think it could be more, Mr. Poilievre.
I mean, that is astonishing. We would have twice as much household debt than we have economic output in the country, and that's on top of corporate debt and governmental debt. Do you have any idea how much this will increase? What will be the total public and private debt to GDP ratio by the end of next year for the Canadian economy?
I do not. That number that I quoted you was debt to disposable income, which is not income. It comes after necessities. And there's a number that's often quoted of 176% as of the last quarter of 2019. That number will go up to approaching 230% in the third quarter, depending on a range of economic forecasts, but the one that we're using.
That's as a share of disposable household income?
As a multiple, yeah.
And then you had one that was a multiple of GDP. Can you repeat
that
again?
That number was 99% at the end of last year. And if I remember correctly, it gets to 117% in the second quarter. So I'd say above 115 in my remarks. And It could be 130 by the third quarter.
Wow. And you say that the Bank of International Settlements suggests that anything over 80% is a drag on economic growth.
Contributes to a drag. And the reason for that, if I may just ramble, I won't ramble, if I may be precise, is that you're effectively converting future consumption into debt service payments.
Right.
And as a result, the economy suffers.
Now, you said that there could be a 9 to 18% drop in housing prices. The debt that Canadians hold is collateralized against housing. If Canadians default on their homes after their housing prices have dropped, there will be a default loss, and it is your job to cover that loss as the primary mortgage insurer in this country. As of the end of 2019, your book was at $493 billion, almost $500 billion. How much could CMHC and thus taxpayers stand to lose this year as a result of mortgage default loss?
We actually don't expect to absorb our capital. We have a range of stress testing scenarios that we run, as you'll recall, and based on the current forecast, we have sufficient capital on hand. We had a dividend that we were scheduled to pay, a $2 billion dividend to the Government of Canada. We have decided to withhold that liquidity in order to cover claims. Amazingly, notwithstanding these numbers, they are forecasted to recover. And Canadians do a very good job of paying their mortgages, even when they're underwater. So our loss forecasts are not extreme.
What are they?
I will look them up, and I will return to that. I don't have it in front of me.
How many Canadians do you expect will default on their mortgage in this calendar year?
I will try and get you that number too.
All right. Now, you have vastly expanded your operation in response to the COVID crisis. You have, along with the government, instituted a insured mortgage purchase program and expanded Canada Mortgage Bond. Bank of Canada is now getting involved in all of this. Do you worry that the degree of government involvement, government insurance, and government purchases of existing mortgages could lead to distortions in the marketplace where risk is separated from reward and put on the backs of taxpayers rather than on the backs of those who profit from it?
As far as we can tell, banks don't adjudicate insured mortgages differently than from uninsured mortgages. And so, and I've got the answers to your question, your prior question. And so at an extreme, we'd worry about it. For a short period of time, this is a regime that's served us well in Canada, and it means that we have a CMHC to absorb losses like this and help people stay in their homes. There are something like, well, as I said to you, we think deferrals could get up to 20%. Right now, 12% of mortgages are in deferral, either through support through ourselves and the private mortgage insurers or banks directly. And that's a form of resilience, I'd suggest to you.
And
sorry, if I may answer your prior question?
Please.
So our moderate stress test would suggest we could have claims losses of up to $9 billion over time as a result of these events.
Okay, thank you for getting that information so quickly. And then finally, you are buying mortgages from banks, basically, and other insured lenders. They want to get the maximum price for the mortgage products you're buying from them. And their shareholders depend on getting the best price. You don't have the same profit motive discipline over at CMHC or a government-owned entity. How do we as taxpayers know that you, and therefore we, are not overpaying for these hundreds of billions of dollars of mortgage products that you're buying on our behalf?
So the only mortgages that we're buying are through the Insured Mortgage Purchase Program.
Right.
I've given you the pricing of that in a chart, or it will come to you through the chair. You will see that our pricing is deliberately competitive versus market products. In fact, we peg it off something called covered bonds.
Right.
Covered bonds are sold in the market to European investors. They're effectively securitized mortgage bonds. Those right now are in US dollars, 1.66%, in euros, 1.63. We are charging for IMPP 1.71 to 1.88%. And we're doing that deliberately to make sure we're not the cheapest form of money and subsidizing this lending.
And covered bonds are, last question, covered bonds are an alternative to government-backed mortgages, but they constitute a very small part of the Canadian landscape.
Yes.
Why have we not moved away from governments backing up the holdings of banks towards covered bonds, which are widely used in Europe and which keep the risk and reward firmly together in one product and in private hands?
Yeah, indeed, we have somewhat. And OSFI relaxed the so-called encumbrance limits, which allows banks to issue more covered bonds as a result of this crisis. It's a move that we at CMHC support, both in terms of diversity of funding and in making sure, as you say, that Canadians and banks aren't too reliant on the federal government. That said, as I said earlier, having CMHC as a public policy instrument in these times is a form of stabilization, and we certainly saw it in our performance in the last crisis compared to the U.S.
Thank you both. We're quite a bit over there, but I think we're on a theme. Nice to finish it. Thank you both.